I wanted to talk to all the people that are currently homeowners. Whether you have a primary residence only, investment, or second homes, I wanted to talk about HELOCs and HELOANs. The difference between a HELOC and a HELOAN, first of all, is that a HELOC is just like a credit card. It's a line of credit. You only pay on what you use. A HELOAN is a standalone second lien attached to the property, whether it's your primary residence, investment, or second home. That is just one lump sum of money. So if you go in and you get a HELOC for 100 grand, then you can use that for whatever you want to use it for. If you get a HELOAN for 100 grand, then it's there and you get that lump sum of funds and you pay immediately on that whatever the interest rate is on that $100,000. The benefits of using these are that if you're someone and you're sitting at a lower interest rate that's lower than today's rates, you want to get a HELOC or HELOAN. So if you're at a 3.5 or 3.75 and you're like, oh, I don't want to refinance that, but I do need some cash out of my house, you want to talk to us about getting a HELOC or HELOAN. They're easy to qualify. They are full doc loans. And you can also do these with bank statement loans. On the HELOAN, as a primary residence, you can start at a 660. On the HELOC, you're going to want to have mostly a 680. If it's your second home or investment property, we're going to need mostly a 720 to do those. The minimum loan amounts that we usually do on these are 35,000 depending on the credit line, or 50,000. If you're interested, let me know and we can get you set up. Talk to you soon. Reggie, GrahamHomeLoans.com.